So, what do we do here at Alpha Trading? We get together Monday through Friday, 2 p.m. Pacific Standard Time for a little break from Clown World. We like to talk about volatility, probability, and statistics trading, and do a little bit of analysis along the way using probabilities, which is the only way to do an analysis. There's a lot of people out there on YouTube that like to spit numbers out. They have no idea what they're talking about. Sometimes they're right, sometimes they're wrong, but they don't have a clue about the real probabilities of what could happen. So let's take a peek here real quick on our probabilities chart, right? We've got normal and Laplace distribution levels for the current candle, and we've got a couple projections going with our projection boss, which is a wonderful private indicator, right? I mean, it's lucky it's even private. We really, as a group, don't even want to share it with anybody. I mean, that's how powerful this is, especially if you trade options. So, you know, if you do end up coming into our Discord and you join this exclusive community for $10 a month, you buy our indicator package that's packed full of wonderful indicators, statistics and volatility, probabilities, all kinds of fun stuff. And you get to interact with this great community. You know, the people that code these indicators, they're all within the community. It's not like just one person or whatever. And so if these people see you interacting in the community, if they see you being productive and wanting to learn, they will probably notice your participation and probably give you these indicators for free, right? That's what they'll probably do. You know, we haven't reopened the Discord yet, but when you're a volatility trader, you get excited when somebody wants to come in and learn, right? Because there's just one more person we can save from traditional technical analysis. But we don't have to worry about it. There's always going to be a massive group of people on the other side of our trades, no doubt about it. So if we can just save one here, one there, one here, one there, that's fine with us. You know, we really don't care if people want to trade traditional TA. At some point, you get wrecked over and over and over again. You get tired of it, and you want to try something new. Well, try math. Math works, right? Math doesn't break. Traditional technical analysis does. So let's take a peek here. First, let's look at these projections, and I'll turn them off, and we'll look at some daily levels here. I already know where some of this price action went, which is pretty typical. Okay, let's start with this with the projection. Let me save this real quick. Ooh. Let's turn off PV2. Let's just look at this projection right here. Projection boss 1. We start on the first down candle here when we had this second dump, right? We get a nice big 10.5K dump here, a little bit of distribution with the final dump. Bam. And now you can see the first candle went down. You can see this little blue dot here. It tested the first standard deviation normal distribution on that daily candle, pulled back up, right? Pulled back up. We open up the new day, wham, we slam down to the third standard deviation. That's that little blue dot right there. Comes down, pulls up from there. And also, it was going down to test the 99.7% probability range of Laplace distribution on this projection. That is what this projection model is. It is Laplace distribution. We open up 2 days ago. It immediately pumps up to the 68.3% Laplace distribution range to the dollar, right? And then we get the final dump of the day, goes down. What does it tap? Second standard deviation, normal distribution, that there was a lot of confluence with the 99.7% probability range of Laplace distribution. It pulled up from there. At the same time, we've got low, lower low, lower low, 3 daily candles. On the last 2, we get the low on the returns candle and then a higher low. Bull divergence between returns and price action. The last 2 days have been to the upside. And we have now broken back into the 95.4% range of this distribution for Laplace, right? The Laplace distribution model. So So that is wonderful in itself. Let's see. So what is today? Thursday. Let's pop out here like to the end of the weekend. What is the mean of this original or the second dump here? Almost 50K. So if this price action's going back up to test this white dotted line here, which is the mean of this distribution, that's what you'll be looking at. It's almost about 50K. I think it was like 49.7. If it wants to come up and test the bottom side of the 68.3% distribution range for the Laplace, we are talking about 48.5. So it's really, there's not too much of a difference, about $1,000 between the bottom and then the mean. We'll see what happens this weekend. And when we go over to the regular trading chart, we'll get a little bias on the higher time frames and see where exactly this price action could go. Now let's turn on PB2. Let's turn off PB1. Boop and boop. Okay. So you can see from this projection back here, we ran up from 28K low up to $43,000. Had a 4-day pullback that was supported. Yes, I said support. There is support and there is resistance in probabilities, and it is these ranges. 68.3% probability range, 95.4% probability range, 99.7% probability range for Laplace distribution. It's the only kind of support and resistance you need to be paying attention to. If you're drawing lines on your chart from the tops and the bottoms of data sets, yeah, you don't have to look too far for reasons why. You're getting wrecked all the time. Let's see here. So you can see how the 95.4% Laplace distribution range supported this down move right here, right? We had one wick. We had 2 wicks below it, but you can see they were actually, this first wick down, it hit the second standard deviation normal distribution. This wick down on this next daily candle literally bounced right off of that Laplace distribution, the 95.4% range. And then we almost again got to the second standard deviation of Laplace normal distribution and the 95.4% distribution level of Laplace distribution on that daily candle. Then we started to move back up to the upside, broke through this 68.3% Laplace distribution range, dipped down in it a couple times, right? Found a little support right here on these 2 daily candles, and then we had that run up to about 53K. All right, and then we pulled back. Look at the wick. Here, let's expand this a little bit so we get a better look. Look at the wick. Look at the pullback. So we start the projection right here. We get up above the 68.3% probability range. So now we're out here. It was heading up to the 95.4% range, right? We had a pullback, didn't quite make it. Look at the wick though. It came back down to test the mean of this distribution. Pulled up from there. Also literally hit about the 6th standard deviation normal distribution on that daily candle. That's powerful. You can expect this pullback, right? Pretty much, people that didn't take their profit on that short right there, ridiculous. Why would you just sit in that trade? This is why we trade this. You could have got a lot of that, but look, by the end of the day, boom, it sucks right back up. And if you remember that daily dump, that happened so fast. If you weren't prepared, if you did not have you didn't have your take profit set down here by using some of these distribution models, that's on you. You lost half your profit there. Then we pull back up. We rejected a couple days right off the top side of the 68.3% Laplace distribution range. Fiddled around a little bit. Came down on this daily right here, almost hit the second standard deviation normal distribution. You got a little bit by the 95.4% Laplace distribution range, pulled up, made another shot to break out to the upside. And this is all distribution going on right here, so it was highly unlikely that was going to happen. And you can see what happened right here. We rejected off the top again, had this final dump. This first big candle, it tested the mean again. The wick went right to it, pulled back up a little bit. Then the bears tried to push it down below the 68.3% range. It got a little bit below it. At the same time, a little blue dot right there, almost to the dollar. It went a little over, if I remember correctly, by about $125. Tested the second standard deviation normal distribution, pulled back. Created this bull div, lower lows, higher low. Last 2 days have been up. All right. That is that projection. This is what I like to do with these projections. I like to give a little play-by-play just to show people what's happening here. And I mean, literally 80 to 90% of this market is being traded by algorithms. Algorithms that are being programmed with volatility, probability, and statistics. That's what I like to prove this, right? That's why I do these play-by-plays. All right, let's see here. Back on. Or not, actually, whoopsie daisy. Let's get them back off. Wanted to turn that PB2 off. Let's see what we did today. I mean, I kind of already know. Yeah, you can see. So we opened up this daily candle, right? We opened up this daily candle. We got literally, let's see here, like 50 bucks, about $50 below the 68.3% Laplace distribution range. That's a little yellow dot right there. Then it pulled up from there, made a run to the first standard deviation normal distribution. It got within about, let's see here, pretty close actually. Is that 45,239? About 200 bucks. About 200 bucks short of it. But now I'm going to go to another chart and I'm going to show you why it didn't get to that first standard deviation normal distribution. Let's pop over on our alpha trading volatility range estimator. And is what this indicator does is it will populate volatility ranges based on the previous day, the previous week, and the previous month. Okay, right here. This yellow cross line right here, that is the center of this monthly volatility range. It's a powerful area, real powerful area. So we got one wick up within about like $40 of it. Pretty much pulled back ever since then. All right. But you can see, like I told you, like when we opened up this new day, this white cross line is the 68.3% Laplace distribution level to the downside. We dipped a little bit below it. Where did this candle close? Right? It closed. This was the new daily volatility range. Right? You can see how it dropped. It immediately dropped down, went below the 68.3% range of Laplace distribution and bounced off of the top of the daily volatility range. Then made a run. This green dotted line right here, right? That was the first little bit of resistance with these candles. That is a support level of the weekly volatility range. The bottom of the new weekly volatility range is right here with the top of the monthly. Right, there is a ton of volatility right here. I've been talking about this for weeks. Just keeps piling up. Lots of volatility in this range. That's why this price is all over the place. So you can see though, this wick almost got to the 68.3 Laplace distribution to the top side. So pretty much within the first like 4-hour candle, we made a run down to the bottom, run up to the top, and really tested it right here. Had a rejection in the middle of the night, where I'm at anyway, pulled back down. Kind of came down, almost tested the 68.3 again. And this is literally right here is when traditional markets opened up, had a nice little pump, went sideways right around this weekly support level, pulled back a little bit, and then had this run up right here to make a charge at the center of the monthly volatility range. So by the close today, the bears, they're going to try to close this above the middle of this volatility range. If the bull out goes are in full effect, you'll probably see it close above the first standard deviation normal distribution up here, like above 45,243, which it wouldn't be shocking at all. We're in the last 4-hour candle. The 1SD, the first standard deviation normal distribution for the 4-hour candle, is above the daily's first standard deviation. So this is like a magnet up here, to be honest. So we could get a run back up there, but I was noticing something. Let's go over. Oh, look at that beauty. So on 4-hour. Was that on the 90? Let's see here. Yep. So we literally, at that close of that 4-hour, We printed some bear divergence between price action and the returns part of the Wolfsbane indicator right here. We just had an update today too, right? That update is going to include where you have the ability to toggle on and off on the Z-score. That is this area that you see. You can toggle on and off whether or not you want that Z-score based on the log returns or price action. So that is pretty cool. And did some color updates. Yeah, very powerful indicator. Everybody that already has it, you will see an update in your notifications. So let's see, what else am I seeing? And right when that bear div printed, look where we're at on our little alpha trading trend machine with these power means, right? Right here, this pink power mean. Okay, so there's a little confluence there. Could we get a little pullback here? We could, but I'm telling you, these bulls are going to try to push this thing up. They're going to try. But considering this bear div printed on the 4-hour, we could get a quick, maybe little, they'll attempt it, and it could pull back because the bears, they are going to want to close this price action below the bottom of the monthly range, right? That's why this red cross line, that's the bottom of the monthly range. That's why on this 15-minute, you just see this just swarming around here. There's a battle going on here, right? The bulls want to push up and get and close today inside this monthly volatility range. The bears want the price action to close below it. So we will see who is stronger today. Let's go back over here. Dun, dun, dun. Somebody is logging on and logging off. Let's see. And, you know what? Interesting. The entropy is in randomness though, but you can see mid run here, the returns went from being below the mean to above the mean. They are decreasing on this 4-hour candle. That's what the dark cream EPP candle is telling you. Returns are above the mean, but they're decreasing. They're heading back towards the mean. So that actually, this 4-hour candle right here, the previous one where you had that little run up to almost the 1 SD standard deviation, normal distribution, that definitely sent the returns back up above the mean. That's pretty powerful. You don't see that all the time. So that was a good 4-hour candle. Low length AVR is expanding positively correlated, but you got the mid length expanding negatively correlated, and you have actually, you got a little walk up. You do have a little bit of contraction on the high length negatively correlated. So this last 4-hour candle could be really interesting because you got the high length saying walk up, low length saying that this thing could pump if we get some nice volatility come in here. Then you got the mid length saying down. So what we really could see is, like I just said, that's what this is telling me too, that we could possibly get a push up here to what price? Maybe to about another $500 or something. Maybe up to this 1SD 4-hour. So $700, $800, maybe quick push. And then this thing pull back because is what those candles, or is what this volatility is telling me, is this last 4-hour candle's probably going to be a nice doji, right? It's probably going to be a nice little doji. So we're going to need a little pump in price right up here, maybe halfway to that other power mean, then pull back a little bit, create a doji on the last 4-hour candle. See, we are having an outlier though on the variance here, positively correlated, and a Z-score. It's trying to cross up. This is, there's getting a little bit of a mixed signal here. The z-score rejects from the zero threshold here, which is the zero mean for the returns oscillator. And we did print some bear div, and the returns oscillator was really close to that zero mean, and it rejected. So if we are going to get a pullback here by the end of the day, in the next like 2 hour and 45 minutes, we probably are going to see that little pump and then a pullback, right? Then a pullback. And at the end of the close today, we could continue to have this outlier, and this correlation could break negative. So then where would I be looking for that? Yeah, we'll have to get the new daily range. Actually, let's see. Let's see what that new daily is. Let me go over. Put this on a 15-minute real quick. Actually, let me there 1 second. There we go. That's off. There we go. Get a vertical out here. Everybody that's learning how to read price action, you should be doing this every day if you're worth your weight in salt. Let's see here. So what is that? 1700. Boop. There was the beginning of the day, right? And I'm gonna throw another one out here to close. Boop. So we got about 4, 8, 10, 15-minute candles left. So depending on what this does right here, and I'm sure there's already people, all these little pattern goofy traders are already screaming about shit. You can already tell what they're screaming about too. And if you've ever seen pattern traders cry a lot, it's because these things can break every which way but loose. It's ridiculous. People that trade patterns, they need to be mentally evaluated, in my opinion. It's not a good way to trade at all. But let's see here. And for any of you that know patterns, what are they screaming about?
Oh, there's a bull pennant. There's a bull pennant on the 15-minute chart. This thing's going to go to the moon, man.
It's like, you ridiculous. Oh, I see what's happening. Turn that off. Let me get rid of that little line. I wondered why that baby was still on. So volatility range for the new daily. That's what you do. You want to look for the average of price. Goofies over there in traditional TA world for ever, maybe decades, they love to call these pivots. Hello, that's a pivot. That's a pivot in price. That's a pivot, right? These are volatility ranges. That's why when people are coming from traditional TA, they are clueless about volatility, right? They're absolutely clueless about volatility. When you start talking about volatility, 95% of them are like, volume? Every time. It's like, no, not volume, volatility. Volume is absolutely worthless. You might as well just pop up the order books and start, oh, look, there's a sell wall there. Crazy. So you want to find the average, about where the average of price is going into the new day. And that's going to be off the previous day. All this price action right here. You need to take into account where all the volatility is. Was it to the upside? Was it to the downside? I can see right now that probably about 70% of it was to the upside, right? You had some volatility down here, nice 15-minute candle there, this down move, that down move, but predominantly wham, 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 and then this late move up. It's probably about 70%. So that's going to tell you immediately that that is going to pull the new daily volatility range up a little bit. What do I like to look at, right? What do you think these wicks right here are hitting? Look at this wick rejection right here, all right? Look at these wicks. Look at these wicks. What are they finding support on? It's almost a roadmap when you understand how to read price action, where the new range is going to be at, right? There is a lot of volatility right here. And this literally, from what I'm seeing, that's probably going to be about where, if price action goes up a little bit or closes right here, That will probably be about the top of the new volatility range, maybe around 44, 450. And it's going to be a fairly big range like yesterday, probably a few $100s, maybe $300-400. So you could see the top there, and then you could see the bottom of the volatility range down here around 4K, right in this area, and then the center right around through here. You can see all these wicks, right? So you can talk maybe 44,250, 44,2 could be the center of the daily volatility range. But that's what you want to look for when you're trying to read this price action and find out. It's already telling you where all this volatility is at going into the new day. You just have to know how to read it. Really haven't talked about that too much before, but there you go. There you go. Let's get rid of that. Boop. Okay. Is that still on? Nope. Bye. Okay, let's get back over here. Yeah, even on the 15-minute right now. Actually, that baby just turned around. We'll see though. You are starting the and is what is the EPP? It's R squared. What's R squared? It's the coefficient of determination. So what is that going to do for you as a trader when you have it linked up with the entropy here? It's literally telling you that when entropy comes out of randomness around this zero threshold and starts to drop down, telling you that that price action is moving into a trend, the R squared is going to tell you if the correlation is increasing or decreasing. That's what the R squared is telling you. And it's telling you that correlation increasing and decreasing between entropy and price action. And you can see when entropy comes out of randomness, like all through here, all this right here, it's just random, right? And yeah, it even looks random, right? There's no trend there. You had maybe 1, 2, 3 15-minute candles that did anything more than a couple $100. Then entropy comes out of randomness in the trend, you get a trend. Right? Now it's been declining, going back into randomness again. And the R squared is decreasing. The correlation is decreasing. So that's how you read that indicator. There was a couple of questions in the chat. I thought I'd go over that real quick. Powerful indicator. I'm about to do a big, nice little idea on TradingView about this wonderful indicator, along with our DLP, right? Along with our DLP. Literally two of the most powerful indicators we have. Like recently, we had some indicators pulled down because it's a clown show where we chart. It's okay, though. We love them. Woohoo! It's a party. Sometimes you make stuff that's so powerful, it threatens people on TradingView, other vendors, right? And so they're just like, oh, no, these indicators are too much like somebody others. Where there's 1,000 RSI indicators, there's 1,000 stochastic indicators. Nobody gets their indicators taken down, hardly ever. Right? All you have to do when you publish new indicators is make them unique, right? Build upon existing indicators, not their code, right? But make the indicators better. And wow, we did it too good. We scared the shit out of people where they complained so much. They were so afraid of us. Oh my God, these guys are going to take all our business. Where it's just like, we're not in this to take people's business. We're here to help people trade volatility, probability, and statistics. To be honest, anybody that's out there, you come in, it's a privilege to join our Discord and get the opportunity to purchase our indicator package. Trust me. That's what we think about our indicators. That's how powerful these things are. When you learn how to read all this, it'll change your trading career forever. Forever. It'll change you forever. Okay, let's see here. Get off that little thing. But yeah, we just scared people. It's okay. It's okay. No problem. You can't hold a wolf pack down. No, sir, you can't. Any of our super fans out there watching? I know you watch. You want to learn how to trade, right? You know where to come to learn how to trade volatility because your clown show doesn't teach. All right, let's see here. We look at the 15-minute. This is interesting. Overall, we've had a lot of weak bear div building on the Z-score, and I do have this set up it's the Z-score of the log returns. But we had lately here, we got bull div building on the returns oscillator. So what's that telling me? We could get a move to the upside. You don't see this too often. You really don't, especially these are both based on the returns. So that's an interesting read. You know, especially the other 5 guys that have created this Discord and all these indicators with myself. They're looking at this too, going, that's a little unusual. It is big time. You got to agree with me. I mean, you don't see that very often when the Z-score, especially in log returns, is heading down, but the returns oscillator is heading up. So that is an interesting read. Very interesting. The variance is kind of fluttering around down here right at the 0. It could drop a little bit more. It's on about a 2 right now, and you will never see the coefficient of variation print a negative number. It doesn't work like that. It only goes up, 0 and up. That is beautiful. So this is going to be interesting because it did on the 15-minute did just print this bull div right here, right? Did print the bull div, and that's what this little pump is. Like I said, I mean, this thing's kind of telling me that we're going to get that little run up first, and then right before close, we're going to pull back, create that doji candle on the last 4 hour. That's what the volatility was telling me. Let's see what happens. Same time, you got the DLP down here. It's been decreasing ever since. These are standard error bands right here, right? So very interesting. It didn't even get by the mean of those. If we do get a late pump here, this thing does look like it's going to come back. Let's look at some long-term div on this 15 minute. So what I'm looking for is for like any hidden bull div, right? To tell from this 15-minute pump here if we're going to get some more upside. And I mean, it was just bull div. It was just this bull div that printed. But that can change real fast because this bull div can play out like it just did. I mean, probably a couple $100 real fast. But considering this Z-score is going down, that's why I was looking for some hidden. And I mean, no, not really. Not really at all. None. Okay, that's fine. What about the Z-score? Let's see. No? Okay, all good. It's jumped to literally probably my favorite time frame. Talk about it all the time. Why? I have no idea. Because most people don't trade it. I got a hell of an advantage. Let's see. What's happening on a 90-minute time frame here? Yeah. Got some bear div. I'm going to try to extend the parameters on this freaking when this prints div just for new people. I mean, hell, I can see it a mile away, but yeah, there's some bear div from this whole up move. There's bear div from this high right here. And this candle right here, it's been higher highs. They're all lower highs, even this last move up here. And the Z-score, let's check out Mr. Z-score. Yeah, same thing. All lower highs. So yeah, on this 15-minute from back here, what time was that? It was about 2:30. It was about 5:30 Pacific Standard Time. We got this latest move up. Bear div, Z-score, and returns oscillator ever since then. And the correlation of variance is positive coming down. We'll see. If this thing wants to go up and make that run, you'll see probably have a little outlier because we're talking almost, especially to that 1 SD on the 4 hour, it's almost 1,000, about $900 from where we're at right now. This would definitely probably have another quick outlier, positively correlated, and maybe stay positive when the variance turns back down, and down we go. About the 5 minute. Go to the stream chat real quick. Somebody's chirping. Andy says, open your eyes. Got it. Good. So yeah, now we're down there on the old 5 minute. What's going on? God, I can't believe this guy's on a 5 minute chart. What the hell's he going to learn from a 5 minute chart? Well, a lot. It's where I get all my entries. I trade to 15, get my entries on the 5. When you learn how to do that, you will never have very rarely will you have a bad entry. And when you trade volatility, What are those 3 rules? What makes you a profitable trader? The first one and the biggest one is, well, let's see here. So to become a profitable trader, what should I do? Holy shit, maybe I should take profit every once in a while. Not every once in a while. You should take profit. You shouldn't just be sitting in trades. Bitcoin is always going to give you a trade, right? There's always profit to be taken. People think, oh, I'm going to get rich. I'm going to get in this long and I'm just going to ride this thing to the moon, and then they're liquidated, right? Or their stop loss gets taken out because they're using ridiculous risk management strategies taught by YouTube TA gurus. It's a joke. But anyway, that's what I do, right? And literally, I'm not going to say any like win percentages or anything, but it's like you want to have post only limit orders on your entries and your take profits, right? All the time. People think that's so hard. It's not when you learn how to do it, right? And we have a private chat in here, and I was just like, I've talked about this forever. I'm going to show them, right? And everybody that saw that post I made, well, it was about, it's over 90%, right? Over 90% of my trading volume was maker volume. So when you see that, let that sink in. You can do that. It is easy, but it's like you're not just waiting. You're not sitting in this whole up move on the 5-minute, right? You're taking profit at distribution levels way before this thing peaks out, unless you're real good, right? Unless you're real good and you learn how to read the volatility. You learn how to read the volatility. Now, and here's a good example, right? So right here, you get expansion. You get expansion right here at the beginning of the move. Expansion on the high length, that's positively correlated. Expansion on the mid length, positively correlated. Look what happens when you start to get contraction. Look at the correlation break negative. What is that telling you? Yeehaw, let's ride this bitch a little farther, right? Because when you have volatility contracting and all of them go negatively correlated, it's a no-brainer that price is going to continue to walk up. So where you were going to take maybe profit on whatever time frame, first standard deviation, if I'm trading on the 15-minute, I'm looking at the hour, maybe the 4-hour, depending on how big of a volatility move we had. You can bump that up to probably the second standard deviation, front run it a little bit, and you'll probably likely get that trade. So yeah, that's how you do it. You want to just make sure, and don't put in your take profit orders right after you enter. That's just as bad as putting in a stop loss, right? Right after you get your entry. You want to wait, and I'd never put stop losses in. They're in my head, right? They're mental stop losses. In my opinion, if you're not sitting at your workstation or your laptop, or if you're out there in cell phone trader land, monitor your trades. You should not be trading if you're not sitting at your workstation, wherever that workstation might be, right? Have a mental stop loss. And as soon as that volatility takes hold and you start seeing these 5-minute candles just ripping, right? Then put your take profit in. Volatility's got a hold of the move then, because I'm telling you, and maybe this doesn't go for everybody, when you're trading high volume, right? When there's little exchange operators that are like, oh, look at him, right? You start trading a couple Bitcoin, 3, 4, 5 Bitcoins at a time. Trust me, you are being noticed. It's a huge red flag. They want to get you. They don't want, and if you put in a take profit immediately, they're like, oh, we're going to front run this fool. We're going to get it up here a little bit. We're going to make him market sell out of his position. They want their trading fees. That's what it's all about. They want their freaking trading fees. So just you'll learn. You learn over time as you trade, right? You will learn how to get these limit orders filled. And if you trade a 15-minute chart, you will find, like I talked about yesterday, the 15-minute chart you could be looking at it and it's literally dictating to you, hey, we got all systems go here. This is a great long. But in my head, I'm like, okay, a lot can happen on that 15-minute candle, right? A lot. That thing can pull back several $100s before that move takes off. So that's why you drop down to the 5 minute. And I'm telling you, there's a lot of times when I see an entry on the 15, I drop to the 5 minute, and the 5 minute is screaming, not yet, not yet. There's bear div on the 5 minute. You're going to see something on the 5 minute that you know this price is going to pull back first. Now, granted, if you drop to the 5 minute and the volatility is all low, and on the 5 minute, you got the green light and it's starting to expand, get a limit order in, right? And is what I'll usually do when I see that. Whatever the price is at, I'll drop down a couple dollars, boom, I'll hammer in my limit order, be like, come on, baby, come on, baby. Probably about, that's the thing, when the volatility's always already taken hold, you'll get filled about 50% of the time probably, where it'll pull back a few dollars, hit your limit order real quick. But most of the time, 50% anyway, the move is going to take off without you. Hey man, that's fine. You don't have to be in every move, for God's sakes. Look at the 5 minute chart. There's moves all over the place, right? And when you're a volatility trader, this is like, I mean, come on now. I mean, look at these moves all over, right? So you don't have to be in every move. Look on the 5 minute. Look at all these flashes. Look at all the volatility expansions and contractions. Incredible, right? And I'm talking about especially the two lower lengths. They're all over the place over a day. We're talking like 30, 40 trades a day if you know what you're doing. Now, that's you're going to work up a sweat having a trading session like that. But yeah, it's in the end, it's well worth it. Especially if you can get all these limit orders filled and you're not paying any trading fees, depending on where you're at, right? There's some exchanges where you stake their tokens. You can literally get zero maker fees. So it is a no-brainer. People are always like, where should I trade? I'm like, well, look at this exchange. You can stake so many of their tokens and you get zero maker fees. It's kind of a no-brainer. Not too many offer that, but there are a couple. Like right now on the 5 minute, right? On the low length, volatility is dropping right here. Now, when you see volatility dropping like this and the correlation's high up in this zone, I'm not saying it can continue positively correlated, but there's a way higher probability that when this volatility really starts to expand, like it's expanding a little bit right now, but that this will break negatively correlated and you'll see price drop. So these are the things you need to look for, especially when entropy is literally starting to build. Returns are below the mean on the 5 minute. Let's see what happens here. This is how you begin to learn how to read all this stuff. Yeah, it's kind of weak bear there too. See. Nope. Dib on the Z-score. Okay. We'll see what happens. What else? What time is it? 2:42. Nice. Oh boy. Let me go to the index here. I did say. Let me pop over here one more time. On a daily. Let me. It's Thursday, huh? Look at that weekly candle. Oh my goodness gracious. Oh my goodness gracious. And right, so this weekly candle, within a couple $100, nailed the 95.4% Laplace distribution range. You know, when people don't realize, when you get wicks like this and stuff, and people in traditional TA, they're just like, oh, what the hell's going on? Oh, I have no idea. Try to catch a falling knife, try to do this, that, or the other. It's just stupid, right? That would have been a great I mean, for you swing traders, if you like to trade the high time frames, that'd have been a great entry. Would have been a great entry. But I'm telling you right now. So if that would have been a great entry, and when did we get that low? That was just recent, right? 39, a couple days ago, maybe it was right at the beginning of the week. Hell, man, you're already taking profit. Hello, right? The thing was up 5K. I mean, you're out. That's like a 3-4 day swing trade, because that did pull back from that 95.4% range. Right? Would be a bit surprised by the end of the week if we pull back up inside the 68.3% range. That's up above, that's almost at 47. So we'll see what happens. So is what I'm looking for. What's the top side of the 68.3? 50K. There's that 50K number. Let's see here. So 50K. Let's go over here real quick. I'm on the index. Let's see what this weekly looks like. Oh, you've got this weighted or you got this 47.5. The variance is turning up on the weekly, but at the same time, we just printed this bear dip on the weekly. But hell, man, that's a nice little pullback there, right? 53 down to there. I mean, that was like $4,000. Could easily be it. Let me see here. So what am I doing right now? I'm looking for some confluence at that 50K level is what I'm looking for. Yeah, even the 7-day printed it. 6.4. See, I see these AVRs, man, and they are all contracting on the 7-day, negatively correlated. And look what's happening here, right? So the R squared is increasing between entropy and returns, but the entropy is going into random. So that's telling me right now, oh, it's going to get random. It's going to be all over the place. If you see this entropy, if we see a trend start to the upside, and you see these candles start to turn blue, and it continues to increase in correlation, you'll definitely probably see that by Sunday. When does this actually? Because this closes before then, if I'm not mistaken. Actually, today, beautiful 7-day candle. We'll get a new 7-day candle. Be looking at the 7-day chart at the close of the day. This is going to tell a lot. I want to see what's going to happen with this volatility and this RO. Is this RO going to turn back up? Because the variance is starting to head up, positively correlated to Z-scores heading up. If you see this returns turn up, yeah, we'll probably be at 50K by the end of the weekend. That'd be very nice. Let's see here. What's up here at 50K? There it is. Yeah, weekly. It's the first significant level of the weekly volatility range. That would just to end the week right there. There's a little confluence there. It's like 49.7, 49.7. So that's even making more sense now. When did we get a 3-day? I think tomorrow. Yep, tomorrow we get a new 3-day. We get a new 2-day today, though. I'll check that next. Chad, you can see these two stabs of bear div right here. It didn't print, but boom, there's more bear div, and you can see these 3-day candles. Zip, zip. Bold div, no bold div. Nope. No bold div printing. It's up there. 22. See if the 2-day tells me something. And this does in today, yes. New 2-day candle today. Just looking. That's what I don't want to see. Is any hidden bear, and there isn't. There isn't any hidden bear, so that's good. That's telling you that, you know, continuation of the downside. I mean, there's always a probability, but it's not printing any continuation diversion. It was always good. Boom. Yeah, and this, when you get up into these higher time frames, and this is what I really wanted to do, was you can, if you have this indicator, mess around with the length on the correlation. Not so much the variance length, right? Not so much the variance length, but the correlation. Because when you get up into these high time frames, it takes things longer to populate. You can see right here, we had boom, boom, boom. You know, this was all up right here. There's that wick. Yeah, it's higher. And it was positively correlated. The variance was heading up. But then right when we start to have an outlier to the downside, this correlation was still positive, right? But that could be playing out right now, right? Going back up. That's the thing with these high time frames. Takes things longer to populate. That's why you don't, this is just giving you a little bit of bias maybe of what's coming. You don't want to take entries on these high time frames. I mean, you can if you want, good luck, but price could move thousands of dollars in either direction before wreck you. Let's go to the 12-hour. Let's see what's going on over here. MJ claims it's the Holy Grail. Let's see. Let's just see. Oh boy. There is definitely some hidden bear building on the 12-hour. What's hidden bear? Continuation divergence. And we had some bull div, right? We had some bull div, and that's what shot this price up from the bottom down there at a little under 40 a few days ago. So, but is what happened, that returns oscillator got way above all of these higher or lower highs on the oscillator. This is the higher high, right? Look at all these lower highs, but all those price action, they're all higher than this is a lower high on price. So either this thing's going to have to nuke up and get above where's that at? It's up there above 50K. I'm telling you right now, we don't get up above 50K, especially from this data. Let's see, right where the bear div, right here at this high. Let's see, what's it at? 48.4. I mean, to be safe, get up there. And that's the weekly 1SD, right? Get up there above 50K, and that hidden bear will not play out. But if this thing starts to lag, these bears try to push it down, that hidden bear will print. Boop. And continuation. To where? Who knows? Who knows? But all three of these AVRs are contracting, positively correlated. So, well, the mid length, it's going sideways, positively correlated. Same thing. It's going to walk down. Contraction, positively correlated. Last two 12-hour candles. I mean, that's why that last candle had a big bear wick on top. Oh man, it's telling me by the end of this day, we could get a rip back down here. Where could this thing go to? 43.2. Don't be surprised if this thing drops instead. Maybe have a quick push up here. If it's going to happen, it needs to happen quick. Because these AVRs on the 12 hours telling me that there's going to be a big bear wick by the end of the close today. And that, where's that? What'd I say? 43.2. Oh, yeah, man. Hell, it'll end up being a bearish candle. Oh, shit. Oh, Good stuff. Good stuff. Look at the variance rising too, and it's negatively correlated. So we could see some action to the downside by the end of the day. How about I look at the 12-hour? Man, maybe that MJ guy's onto something with this 12-hour. Oh, he's chuckling. Whatever he's doing, he's chuckling. Let me see here. Look at this DLP. Man, this DLP looks all right. But then, you know, even on the daily, I mean, this variance is coming down, going into positive correlation. Then you got, actually, the returns are going up. The R squared of the returns in price, which is a little histogram there, is telling you, yeah, it's not going to last, that the correlation is heading down between returns and price action. So even the daily saying we could get a little pullback. That's the thing. There's no continuation divergence on the daily. No, there is not. Is what there was bull div, right? On the returns and the Z-score that brought these last 2 days back up down there from under 40K. And I see a lot of people, I don't watch the videos, I just look at the thumbnails and laugh my ass off when I'm just going through YouTube. They talk about, oh, dead cat bounce and blah, blah, blah. And some people are going, oh, we're going to the moon. Some people are like, oh, it's all doom. Boy. You can guarantee those people are long or short. Making videos of what their bias is. Oh, maybe my 20,000 followers are all short with me and it'll make the market go down. Instead, we trade volatility. We don't care which way it goes. We're just looking, we're looking for those signals that the indicators are giving us. Right? And in me, specifically, I'm taking nice quick trades. They're always quick. I'm never in a trade more than a couple hours. Never in a trade more than a couple hours. That's the thing. You see a 4-hour dump like this in the entropy, right? It's trending down to the downside. If you're trading low time frames, do you know how many trades are in these 4-hour candles? We're crying out loud. A lot. Because look, I mean, you see all these bull wicks. People that are just sitting in those positions, right? And they're, oh no, we're going to fucking $2,000 Bitcoin, and now they're still probably sitting in their short, and they've almost lost all their profit. People are pretty funny. They just get stuck in one of these bull or bear gangs, and they're just stubborn. Especially, I notice it's a lot of the bears are way more stubborn, in my opinion, way more stubborn. And I can tell by when I see shorts piling on or coming off, it's always at the strangest times. Where I'll see a lot of bulls, right? I'll see the longs falling off when they should be falling off, when people should be taking profit. But it's the shorts. It's like the shorts pile on even more where they should be taking profit. And then they all get wrecked. No. Tells you. Like that. Bears are a little dumber, I guess. They eat a lot of sugar, right? They eat all that honey. Makes you stupid, I guess. I don't know. It's dumb to be in one of those gangs to begin with. Let's see if we get this little run up first. But I'm not going to be surprised at all if we I'll have to see where the new. Actually, where's that weekly level at? It's down 41.4. Yeah, we'll have to see where all the new daily stuff is coming in. 257. Holy crap. I just managed to mumble for an hour. Okay. Really wasn't any questions. Got the nice small little group. All the regulars. Beautiful. It is beautiful. So, all you YouTubers out there, just searching the interwebs for signals. We're alpha trading. If you stumbled upon us, the first thing you notice is that this guy on the video is nuts. Yeah, you got that right. But what do we do here? We trade volatility, probability, and statistics, right? We trade with the smart money. Who is the smart money? The high frequency trading firms, the hedge funds, the people that been raping the retail traders for decades. They're all wanted for sex crimes. Maybe you didn't know that. They have been literally raping retail traders forever. That's why, what's the 90-90-90 rule? 90% of traders lose 90% of their count within 90 days. And I've changed that to the 90-90-30 rule. Usually it's 90% of traders lose 90% of their count in 30 days. And then they're just sitting there going, what the hell happened? Why? Because they're using bad risk management strategies. They're not taking their profits. That's the biggest reason. They're emotionally attached to their trades. You can't take profit and you can't limit your losses if you're emotionally attached to your trading. There, if you wanted trading psychology and one 10-second answer, there it was. Save your money on buying these goofy ass books and trading psychology seminars because they are total bullshit. I'm here to tell you right now. That's the only psychology in trading you need to know. Don't be emotionally attached to your trade. Period. Are you supposed to sit there when you lose a trade and just smile at the monitor and go, thank you for teaching me a lesson. I'm going to get out my little journal here and I'm going to be like, well, this is why I took the trade. Well, the stochastic indicator told me this was a great entry. And then, well, I was using the average true range to put my stop loss in. But, you know, I was so attached to that trade when the actual price started getting near my stop loss, I got rid of my stop loss. And I was like, no, it's going to bounce. And I mean, people do the weirdest shit. It's unbelievable. Trust me. You should be upset if you lose a trade. Don't hold that shit inside, right? Let it out. Scream at your dog. Do something. Just don't be emotionally attached to your trade. You won't have to deal with that crap. Keep the stop loss in your head, okay? There's some little bits of wisdom that you might want to take to heart. It'll help you a lot. So if you're watching this video for the first time, if this is your first introduction to alpha trading, subscribe to our channel. You're going to want to know when we put out our videos. I'm always dropping lots of knowledgeable information for new traders, right? Always, not just sometimes. Every video is packed full of little nuggets of truth, things that can help you on your journey. Hit the like button if you see something in the video that you like, right? Leave a comment. I don't care if it's a bad comment. Tell me that you are the TA trading guru and that my way is the only way. And I'll be like, okay, good luck. We need people on the other side of our trades. So, you know, it doesn't matter, good or bad. We'll take your comment, right? The link to our Discord is in the description of our videos. Come in. The Discord is closed right now. It's very close to being open back up. We've almost got our new indicator package built, right? We want to have everything set in place. There is a waiting room you can just hang out in. When we reopen, you will be the first to know. Come join us. You'll see what kind of community we have built here. It's an exclusive community. It is going to cost $10 a month to join. Just shock yourself. Spend $10. If you smoke cigarettes, cut 2 packs out a day. Boom, there's your $10 for the month. You will be shocked what you find in our Discord. The educational material, the friendly people, the help you're going to receive, and the most important thing, it is a privilege. You will get an opportunity to use our indicators, right? That's the biggest part of this thing. So come and join us. Come see what we're all about. Thanks, guys, for joining live in the Discord today. That's another good perk of joining the Discord. You get these live streams. You don't have to wait until they get put out on YouTube, right? So all that being said, wherever you live at on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. I will talk to you guys tomorrow, 2 p.m. Pacific Standard Time. See ya.